We now start Chapter 2, Deductions and Expenses. In this chapter, we will investigate payroll deductions, gross pay, net pay, ways that spending habits can be affected by the amount, timing, and regularity of a paycheck. At the end of the chapter, we will be looking at completing a personal tax return, calculating deductions from your pay, calculating your take-home pay, list your monthly living expenses, decide how and when to pay your monthly expenses, and calculate how much money you will have left at the end of the month. Section 2.1, Standard Deductions. First comes the job, then comes the paycheck, and then the deductions. What are standard deductions? Money that comes off your pay before your paycheck is even made up. These are income tax, employment insurance premiums, and Canada Pension Plan payments. What is income tax? Money that comes off your pay before your paycheck is even made up. Both the federal and provincial governments each take a percentage of your gross pay. The percentage that is taken by the two governments is based on how much you make. The more money you make, the higher the tax rate. This is called a progressive tax system. What is employment insurance? Employment insurance, or EI, the government collects money from all workers and all employees. The money that they collect is put into a fund and is used to give to workers who have lost their job due to no fault of their own. So if you get fired from a job, you're not eligible to collect EI. You can also only collect EI for a limited time. And the amount you get is based on how much you've earned in your job. So the more money you made when you were working, the more money you'll get paid if you have to go on EI. What is the Canada Pension Plan? The Canada Pension Plan, or also known as the CPP, is another fund. The government collects money from all workers and pools this money. When you turn 65 and after you retire, you are paid a monthly amount to live on. This money comes from the CPP deductions that you are paid over your career, that you have paid over your career. What is gross pay? Gross pay is the amount of money you earned before all deductions. For hourly employees, it's the number of hours worked times the hourly wage. What is net pay? Net pay is the amount of money you've earned after deductions have been taken away. It is basically the amount of money that you get to keep for yourself.